Hi everyone. For the past 4 weeks, I've been publishing one video a week. This is not my typical schedule. I aim for one video per month and then ad hoc videos when something big happens. It's just that something big happened every week for the past 4 weeks. But I wanted to take this opportunity to let you know that my goal is really to do a once a month strategic overview type of report and video. This is something I mentioned on my blog, but you probably didn't see it on October 15th. And so uh, with my first monthly report being up on the blog right now, I wanted to just give you an idea of what to expect from me. This time it will be a shorter video because I don't want to just repeat everything I said in the past 4 videos. Don't worry about that. If you don't have much time, you can just read the summary here, then have some details about each section. And you can also subscribe at the bottom here for free if you want to receive it in your inbox. In a typical and quiet month, it would just be maybe a 20-30 minutes video just to cover the big picture stuff. But here, of course, I'll just go quickly through the key things you really need to know. And then if you want, I'll put the link to the blog article in the description of the video. So let's get started. So the first big thing I saw in the past 6 weeks was really how both the economy and the stock market seem to be a turning point. And this is worth mentioning because since 2022, they've been completely diverging. The stock market has been ripping while the economy has been slowly bleeding until the turning point. We'll never know exactly when it was, but it feels like it really accelerated in the past few weeks. So this, I think, is worth mentioning because there won't be one or the other to support the other. The other thing is that I think it's been very clear, at least to me, and if you've been following my video, I showed you why. In the past 6 weeks, we saw so many data points showing how the real economy, it's really worse than in 2009 or 2020, which is really scary because for most people, this should be like the lowest of the low in terms of consumer sentiment and all that stuff. Yet we keep seeing data after data showing that it's worse than those years. So that's kind of scary. A thing that I haven't mentioned yet in my videos in detail is I've seen so many similarities between what happened in the year between September 2007 and October 2008 and what just happened in the last year. The central bank reacting the same thing and media is reacting the same thing and the stock market kind of reacting the same way. So it's kind of scary to see those similarities, which is why I think that a big bankruptcy that could trigger a domino effect, a little bit like the Lehman Brothers in 2008, could be really the turning point for the crash. The other big story of the past 6 weeks is really AI, because it really went from there might be a bubble to there's a bubble to actually people are starting to price the bubble bursting. One of the main things that I think kind of reflects that is the credit default swap, which is what Burry bet on during the 2008 crisis, actually before it, and that's how he made money. He bet that the real estate would crash, and so here people are kind of starting to bet that the AI big players will crash because for many reasons it just doesn't make sense. And I think until this year they were using free cash flows to invest, so people are like, okay, we'll give them time to show a return on investment. But now that they are borrowing massive amounts of money to invest in AI, people are like, okay, maybe this is not sustainable anymore because no one has been able to really show how, a dollar invested in AI resulted in $2 of revenue or profit or whatever. Like there's still no real tangible proof that AI made a difference in terms of profit. I know it will, just like the internet did. I'm just saying that right now AI hasn't been able to prove that it's worth it in terms of all the money that has been invested in AI. And I think that I saw a good stat about it. I may have showed the tweet that basically for AI to return a positive return on investment, right now, every Netflix subscriber around the world will need to pay $180 US per month to get the service they're currently getting with AI. So, of course, this would never happen, but it just shows you how far we are from the money invested versus the return investment. And so that's kind of why, when I talk about October 29th being the likely top in the SP 500, I think that, running on fumes has been going on for so long that right now, unless there is some really good news that comes out or something major that we don't see coming, it's kind of done. the stock market has to at least have a healthy pullback of 10 to 20%, which I think will happen by the end of January. So it could be next week, could be in 3 months. I'm just saying this is the kind of window I'm looking at. And this will directly or indirectly affect most prices. So this is why it's worth paying attention. Something else that we talked about in the past few weeks was gold and silver. I also talked about it in August, saying how it was compressing on the chart. So I was looking at technical analysis as well as other factors. And I said before the big move that it was likely going to happen. I also called the top. Remember, if I did the video the day before there was a big crash in gold and silver, and I told you that the pullback was due. And then again, last week, I told you that they both seem to have had a healthy reset. And so now there's a good chance that they would go up over time because the fundamental reasons why they went up have not disappeared. In fact, they might have increased as well. And on a technical analysis basis, also seems like there's a lot more momentum for them. So this is why I still maintain my target for them to be higher by the end of the year or early January. Bitcoin is also interesting. It's not exactly like gold and silver, but there are some similarities in some ways. Of course, there was the major top on October 6th. That was almost like, it seemed like market manipulation because so many people were looking at that date based on the 4-year cycle. And so it seems like big player might have pushed the price, then triggered a crash somehow just to get people to think this is over. Then the price would drop and then they would be able to buy a ton of it for cheaper before the potential euphoric leg of, especially if all the people who sold thinking it was the top have FOMO and come back in. So this is something I will be looking into. I think when everybody is on one side of the boat, it's more likely that the opposite will happen. And so that's why I think that there's actually a good chance that the top is not in. I don't think the top will be, a million or whatever this cycle. I'm just saying, I think it might go like between 130 and 200, something like that. In short, I think we have a perfect storm with the economy stalling, the stock market beginning to crash, and all the data that's going to be released, plus all the wildcards and jokers that I mentioned. So I think it's going to be a really intense few weeks, potentially few months, before we get a real sense of where the market and the economy is going, because it feels like right now, unless something major happens to both, to save it, or one that is able to drag the other up, they are both heading the same way, which is, a healthy recession, because you cannot just ignore a recession forever. At some point, reality always catches up. So that's the way I see it. And if you want some details for each element, I've put, what happened about it, just to give you a quick overview, what it means, so you better understand. And then for your money, if there's anything that you can consider. Whenever possible, I also put the video, and I put the direct section when it was about something specific. And I'm going to give you a quick overview of what I'm looking forward to in the next few weeks that I haven't mentioned yet. I mentioned that the NVIDIA earning next week is going to be very important, but what I didn't mention is that just 2 days later, we have the monthly expiration for options, which every month it seems to be a new record, but this one might be like above all the other ones before, because it's right after NVIDIA. And so many retail investors are using options to bet on it with like a 1-day expiration. So this is going to be interesting. I think it's going to be extremely volatile for those 2-3 days, like the day before the earnings and the next 2 days after that. Regarding the banking crisis, I think this is really evolving into something more serious, because right now, from what I've seen, it hasn't been confirmed yet, but there might be an emergency meeting between the Fed in the US and banks because of the liquidity crisis. So, when they get to the point of doing an emergency meeting on the weekend, which not confirmed yet, but I think I saw a few sources that might be pointing to it, this is kind of scary. So definitely something I'll keep watching. The other thing that's important is the wild card about the tariffs potentially having to be reimbursed. So that's something we probably won't know until January, from what I've seen. But if the Supreme Court reverses all the tariff that Trump imposed on other countries, and he has to reimburse $3 trillion so far, you can imagine the massive impact it would have on the economy, not of just the US, but worldwide, and of course the stock market as well. So there will be some big winners and some big losers, regardless of the decision that comes out. And lastly, I know I have some Canadian viewers, so just want to mention quickly that the Bank of Canada will also make interest rate decisions like the Fed in early December. The Q3 GDP will come out at some point soon, and I think it will confirm a technical recession, despite what the Bank of Canada has been telling us. And the November 17th budget vote, which could result either in a federal election if it's defeated or if it's approved. Some credit agencies have talked about potentially downgrading Canada's debt rating because of the massive deficit that is much higher than in the past. Plus, there is some accounting change that they don't really like. So something that might impact the stock market for Canada, as well as the Canadian dollar value. So people investing in the States or outside of Canada, this will impact you as well. So if you find this useful, feel free to send it to someone else who might benefit from it. And if you want to receive it directly in your inbox, you can just subscribe here to get it before everyone else. I hope that's helpful to you. So if you have any questions about the format, about the content, let me know. I'll do my best to answer you. And thank you for staying until the end.